Welcome to SkyTech-Nexus. Good morning and welcome. Today we're tracking a major story that stretches from Washington and Ottawa to the heart of the American dream. In early 2025, the Trump administration imposed a 25% tariff on Canadian softwood lumber, a move shaking industries and threatening to raise housing costs for millions. This isn't a new fight, but it's the most aggressive chapter yet in a decades-long dispute between two close allies. The Canadian government is threatening to leverage its massive pension funds, while American builders warn this could push new homes out of reach for many families. Is this a necessary tactic to protect American jobs, or a gamble that could backfire? We'll break it down, connect the dots, and show you what's at stake. Let's get into it. The US-Canada lumber dispute is a saga of clashing forest management philosophies. In Canada, most timber comes from government-owned land, with low stumpage fees that US producers call unfair subsidies. This argument has fueled legal battles for nearly 40 years. The new 25% tariff stacked on top of existing duties was a dramatic escalation. Washington's message, subsidized Canadian lumber undercutting American mills, is over. Ottawa's response was swift, condemning the move as protectionism and preparing legal challenges. Canadian industry groups warned the US can't meet its own lumber demand, predicting shortages and higher costs for American homebuyers. In the US, the split was clear. Domestic producers cheered the tariffs as a lifeline, while builders called it a disastrous tax on housing. The National Association of Home Builders warned the policy could add tens of thousands to the price of a typical home, pricing out millions. This is a battle between sawmills fighting for survival and builders desperate for affordable materials. Producers see tariffs as essential for economic security. Builders see them as a direct threat to home ownership. The Trump administration sided with producers, accepting higher housing costs as collateral damage. The question, who feels the pain first and who ultimately pays the price? Let's zoom in on Weyerhaeuser, a timber giant straddling both US and Canadian markets. After the tariffs hit, their profits plunged 50%, a collapse that rattled Wall Street. The reasons: tariffs inflated costs for their Canadian lumber, while high US interest rates cooled housing demand. Weyerhaeuser was squeezed from both sides, rising costs, falling demand. The company responded by cutting production at Canadian sawmills, triggering layoffs and anxiety in logging towns. They shifted focus to US South operations, where timber is plentiful and closer to housing markets. The tariffs, while painful, pushed them to accelerate this realignment. Investors grew wary, and Weyerhaeuser's stock took a hit. The company's predicament highlights the complexity for multinationals caught in trade wars. One part of the business suffers to benefit another. Weyerhaeuser's story is a cautionary tale. Even industry leaders can be devastated by sudden tariffs and a tough economy. Their profit slump was the first hard evidence that the tariff policy was having immediate, far-reaching effects, not just on international relations, but on American corporations' bottom lines. The impact of lumber tariffs hit the US housing sector hard. Builders were already struggling with high mortgage rates, which reduced affordability and kept existing homeowners from selling. With fewer homes for sale, demand for new builds stayed high, but the pool of qualified buyers shrank. The new tariffs added over $14,000 to the average price of a new single-family home, according to the National Association of Home Builders. For many families, that's the difference between buying and being priced out. Lumber costs soared, and builders passed those increases directly to buyers. Supply chain instability led to project delays, further raising costs. Housing starts dipped as builders hesitated to break ground amid volatile prices. The dream of a starter home slipped further away, especially for first-time buyers. Affordable housing projects were postponed or canceled, deepening the crisis. The sector was squeezed by both high interest rates and trade policy, leaving builders reeling and homebuyers sidelined. Canada didn't just protest, it strategized. Ottawa explored using its massive public pension funds as leverage, signaling to Wall Street that the trade war could have financial consequences for the US. Even the suggestion of divestment got American attention. Canada also began aggressively seeking new lumber markets in Asia and Europe, aiming to reduce dependence on the US. This shift wasn't easy. New trade relationships take time and effort. The tariffs forced Canada to diversify, making future disputes less damaging. At home, Canada debated export quotas to stabilize prices and regain control, even if it meant picking winners and losers within the industry. The message: if the US changes the rules, Canada will play a new game. Canada's response mixed legal challenges, creative financial threats, and a push for new markets, showing it wouldn't be a passive victim in this trade war. The Trump administration's goal: revive American logging and sawmills. But scaling up is tough. Most U.S. timber is on federal land with strict environmental rules. Efforts to cut red tape and speed up logging approvals sparked fierce debate. Even with more access, building new mills takes years and huge investment. Companies hesitated to invest, unsure if tariffs would last. Automation and high-tech upgrades became the industry's focus: AI grading, robotic stackers, and efficient saws. Ironically, Canadian companies like Canfor and West Fraser bought or built mills in the U.S. South to get inside the tariff wall. The South's fast-growing pine forests and private land made it the epicenter of the revival. New mills and jobs followed, but the boom was uneven. Regions like the Pacific Northwest lagged due to regulatory hurdles. The industry raced to meet demand, but decades of underinvestment and red tape made rapid expansion a challenge. We're at a crossroads. The 25% tariff has reshaped a decades-old trade relationship, creating winners and losers on both sides. U.S. mills, especially in the South, have seen investment and jobs return. For the U.S. Lumber Coalition, tariffs are a long overdue correction, but American homebuyers are paying the price. Over $14,000 more for a new home in a market already strained by high interest rates. Canada is fighting back, challenging tariffs and seeking new markets, even threatening to leverage its pension funds. The standoff has created deep uncertainty for builders, sawmill workers, and policymakers. The irony: Canadian companies are now investing in U.S. mills, blurring the lines in a deeply integrated economy. Will there be a new agreement, or is this the start of a more contentious era? The stakes: U.S. industrial strategy, housing affordability, and Canada's economic resilience. The future of forests, factories, and family homes hangs in the balance. The only certainty: the North American timber trade will never be quite the same. We've covered the policy, the players, and the price tags. Now it's your turn. How do these tariffs affect your view on homeownership, jobs, and trade? Is Canada's pension fund threat real leverage or just posturing? Should the U.S. cut red tape for logging or protect its forests even if it means higher costs? Would a $14,000 increase change your decision to buy or build a home? Share your thoughts in the comments. And don't forget to subscribe for more deep dives. Thanks for watching. Subscribe to the channel now.